What's up everybody, Gen X Dividend Investor here. In this video I tell you what the 5 biggest mistakes I've made when it comes to stocks, to help you learn from my missteps, as well as to show you that everyone makes mistakes if they invest for long enough, and that you just gotta keep investing rather than quit or worry about it. But first I wanted to do a shout out to Davis DJ and EY Vojtalovic, who just clicked that join button to become my latest channel members. Thanks folks, I really appreciate your support. Okay, I want to kick this off with a quote that goes, "The reason you aren't living the life you want is because you're feeding the life you don't want." I feel like that quote can be about investing in retirement, as well as be about your weight. Like, I've been into fitness and health for longer than I've been investing, and right now I want to lose about 5 pounds, and the part of that quote about feeding the life you don't want has been helpful for me to focus on while I drop some weight. Now I'm pretty tall, so 5 pounds isn't much, but still. One of my problems is that we eat dinner pretty early, and then I tend to stay up pretty late, and around when I want to go to sleep I usually start getting hungry again, so telling myself not to feed the life I don't want has helped me avoid taking in extra calories. Another of my problems is that I have a sweet tooth, and I love having something yummy with my coffees. In fact, today my daughter made some chocolate chip cookies, and so of course I wanted to have one with my coffee. But I didn't want to feed the life I didn't want, which was a life of being a bit overweight, and so I managed to control my urge to consume. And that quote also pertains to people who need to fight their urge to consume more things, to buy more crap that they don't really need. I mean, most people want to retire someday, and ideally retire with financial security and the ability to spend money as they'd like. But most people unfortunately prioritize consuming and spending over investing, and their spending is feeding a life which probably doesn't enable their retirement dreams. That reminds me of a relative of mine who constantly goes to Starbucks and uses Uber Eats multiple times per week, but then also complains that she can't save enough for retirement whenever I talk to her about investing. Of course, I guess you could argue that she's actually living the life she wants right now, i.e. one of expensive lattes and overly expensive food options, but since she constantly stresses about how tired she is of working and how she wants to quit and go on vacations, then I'd say that she isn't feeding the life she really wants, which is one that enables financial freedom. I mean, if she just fed her brokerage account all that cash that she was wasting, then she'd probably be shortening the amount of working years she had left ahead of her, as well as most likely would be improving the quality of her retirement once she gets there, which is the future life she really wants to have. Now, I can appreciate that sometimes it's super fun to get a quick treat at Starbucks, and hey, I'm long Starbucks, but going every day while also spending too much money on other things that you don't really need will simply mean that you aren't really living the long-term life you want. Unfortunately, too many people sacrifice their long-term situation in favor of what's happening in the present moment. They don't invest in their portfolios because they'd rather use the money on something non-critical today. Of course, there are some people who are stretched so thin that they can't realistically invest, but I'm not talking about them. I'm talking about the people who are making fixable mistakes, and hey, we all make mistakes, and I've made some doozies myself. Like, one mistake I made was when I mentioned in a video that I thought that NVDA was overpriced and that people were probably FOMOing into it. But since that time, NVIDIA has probably tripled in price. Now, to be fair, NVIDIA was overpriced at that time, and people were FOMOing into it, and I couldn't have realistically known that shortly after that time that the world's demand for powerful processors would blow up as AI and neural net learning models became hyper-popular as generative AI went mainstream. And as demand blew up, then NVIDIA's revenue and potential revenue also blew up, leading to crazy stock price gains. Which reminds me of this cool headline I recently saw on Seeking Alpha, which I'm an affiliate of, and the title goes, "NVIDIA ahead in big tech race to 4 trillion, as GPUs are tech's new gold or oil." And that really makes sense when you think about it. I mean, oil has been a huge part of growing world economies for basically centuries, and oil is still going strong. Like, here's a graph of oil usage around the world, but you can see how the pandemic caused a dip in consumption. So where will oil go in the future? Over the years, I've seen many estimates that we were just about to hit peak oil consumption, and note that about 7% of my portfolio is in oil stocks. The reality is that predicting the future is really hard, though this estimate of oil usage is where my mind is at, i.e. demand will continue to grow for a while and then will trend down, though I'm guessing that for the rest of my life, oil will still be a decently big commodity. But you can find a ton of inaccurate oil estimates over the decades, so you never really know where the future will take things. And one thing that isn't broadly estimated to trend down is demand for semiconductors and CPUs and GPUs, and thus those little electronic devices are the new oil that's powering economies. And NVIDIA has positioned themselves to be at the right place at the right time, and thus their stock has done really well to this point. An interesting question to ask is, why is NVIDIA doing so well? Well, one reason is because NVIDIA invented a special programming language called CUDA in 2007, which ultimately allowed developers to optimize processing times of neural net large language models, aka AI stuff, amongst other things. So NVIDIA was innovating in areas that are used in today's AI space, and were doing that long before AI became super popular, and thus their CEO and engineers were able to give them a huge competitive advantage, which other companies then had to chase. And these days they're expanding into robotics as well as into software solutions, all of which can be accelerants to their top and bottom lines. Side note, I actually own some NVIDIA as part of my JEPQ holding. Now, I've been a fan of NVIDIA hardware for a long time because I'm a gamer and I've always made sure that all the desktops I bought had NVIDIA cards in them. Plus, I worked in tech for many decades, so I've always had a pulse on Intel and AMD and various other companies in the computing space. Anyway, the reality is that there are tons of great companies I don't own, and I've never felt the urge to own everything. And NVIDIA shooting up is a great example of why I say that owning the entire market, or at least the top 500 largest companies in the US, is often a great long-term strategy for wealth creation. I mean, as long as you keep investing into the VUs and VTIs of the world, then over the long term I bet things will work out for you. Sure, things can crash now and then, and sure, things can go nowhere for a decade or more, but I'm still betting that over the long term that things will work out. Please leave me a comment if you own NVIDIA or any of its competitors directly or indirectly, as it's always fun to see what my viewers are investing in. Okay, moving on. Another big stock investing mistake I made was not buying Apple when I started investing over 30 years ago. Now don't get me wrong, I'm up like 460% on Apple in a relatively short period, but I should have been up a lot more. You see, Apple holds a very special place in my heart since it was the first brand of computer I ever came across when I was like in first grade or so. My uncle showed me his Apple II computer and I fell in love with computer games and eventually with programming. So for over 4 decades now, I've spent a crazy amount of time playing video games, and it all started with my uncle's Apple computer. My first computer was actually a Commodore 64, but I eventually got an Apple IIe and a IIc as I grew older. My uncle taught me Apple's basic programming language while I was in elementary school, and it was because of my love of Apple computers that I got my degree in computer science, as well as why my first few jobs were in programming. So why didn't I invest in Apple if I loved their product so much? Well, one reason was because their stock had been a dog for a long time. Like from 1987 until 2004, Apple was down about 20%, ouch. I actually did a video about how my dad held Apple stock for a while, which I believe was the only stock he ever held, and after Apple did nothing for many years he finally sold out and always complained about what a waste it was, so that probably biased me a bit. And when the iPhone came out in 2007, I again saw it as a good product, and a buddy of mine at work actually bought the iPhone right away because he was a big Apple fanboy, but I waited to invest as the stock started moving. It was tough to overcome that sour taste in my mouth from decades of Apple stock's non-performance. That itself is a great lesson, which is to not let history bias you too much, which is something I sometimes do. Anyway, as I watched Apple's stock price run, I used to chat about it frequently with one of my best friends, who was a professional stock investor and wealth manager, but neither of us got in. He was more of a small cap tech investor, and I was more of a large cap guy, but we'd like to talk about all stocks. So I waited, and finally in September of 2018 some negative news started coming out about Apple. They missed some numbers which spooked Wall Street a bit. And Apple management said that they were no longer going to release iPhone unit sales numbers, breaking from tradition, and since we already knew that iPhone sales were declining, it was another big red flag pushing the stock down more. On top of that, we were entering into a new trade war with China, and that spelled even more doom for Apple. The stock dropped like 35%, and I finally jumped in late 2018. So unlike most of my tickers which I owned for decades, Apple was one I only got into relatively recently, even though it was my favorite company in the world. I didn't have any spare cash sitting around, so I decided to sell some of my positions to get into Apple, but it was probably Clorox and/or Con Ed and/or General Mills, all of which I liked, but liked less than finally getting into Apple at a price and at a time that made sense to me. And after it gained 400+%, I moved some of that Apple position into better yielding stuff as I wanted more income in retirement. I didn't sell any Apple in my kids' accounts though. Okay, moving on. Another stock mistake I made was naively thinking that Disney was basically unstoppable. Now, I don't mean that literally, because I know that tons of things can bring down even good companies, from doing illegal accounting things to having competitors swallow their lunch, but man, Disney seemed like it had built up an iron fortress. They had their parks and hotels and merchandising, cruising, movies, streaming, Hulu and ESPN, and all that seemed quite robust. But then the pandemic came along and park attendance and associated merchandising took a nosedive, and so did their hotels, and so did their cruises, and even making movies and TV and such were all negatively impacted, and so they suspended their dividend and I got out. I honestly never thought that realistically someone like Disney could be hit that hard, unless maybe war broke out on our soil, but I guess that's the nature of a black swan event. And then beyond the pandemic, Disney also fumbled a lot on what they were doing with their Star Wars franchise, and they made some public political correctness missteps, all of which has left them down almost 50% in the last 3 years. Speaking of missteps, one of the big mistakes they made happened when Bob Chapek became CEO in 2020, and he took the prior CEO's already aggressive projections for their streaming platform subscriber growth and then quadrupled them. Basically, it looks like he looked at how fast their subscribers grew during the pandemic and inaccurately assumed that the growth level would be maintained, but the pandemic caused what economists called demand distortion, where the subscriber growth levels Disney had weren't representative of long-term growth potential. Now that seems kinda obvious to me, but what do I know? And sure enough, as they got past the pandemic, their subscriber growth rates shrunk, which irked the market due to what was previously communicated. And beyond that, their CEO also had shifted their strategy from licensing their movies and TV content to instead having it only on their new Disney Plus streaming app, all of which caused some revenue issues. I mean, before they focused on Disney Plus, they're making tons of money having their content on various streaming and cable services. So net-net, Disney had some material revenue loss with their business direction change, and that was a surprise for Wall Street, and not a good one. Another big mistake Chapek seemingly made was reorganizing the company based on recommendations from a consulting company he hired, and he ended up making things more hierarchical. And that in turn took away some business freedom that the movie and TV execs had, and the new organizational structure ended up irking a lot of folks and also started slowing things down. Then to add insult to injury, they got in a public fight with the governor of Florida. So internally their culture was taking a hit, and operationally things took a hit, and externally their reputation in the market was also taking some hits. Like in 2019, Disney was the 5th highest scoring company in the Axios Harris Poll 100, which gauges the reputation of the most visible brands in America. But in 2023, Disney fell down to 77th in that list, which was a massive drop, though this year they moved up a bit to 67th in the list. Now the good news is that I think Disney can get their groove back, as they own some awesome assets and they can always fix their mistakes. Bottom line, for me it was another lesson that no company is invulnerable, and is yet another reason why you don't want too many eggs in just one basket. I mean, at one point in time, I was seriously considering going way heavier into Disney, because it was my smallest position, because I felt it had such a bright future, and so this experience really helped reaffirm why no company is guaranteed. Okay, another bunch of stock investing mistakes I made happened all around the dot-com crash. Some of my tickers were in unproven, high-flying tech stocks, many of which went kaput, so I should have been more diversified into other sectors, and I probably should have invested more conservatively. Fortunately, I also had some steady Eddie stuff which survived, though it dropped hard as well. Then after the market crashed, I made the mistake of slowing down how much I was investing. Basically, it was a lot easier to invest when times were good and you thought you were an awesome investor, but it became psychologically really hard to invest after I saw my portfolio and investing ego get decimated. And remember, back then there wasn't YouTube, so learning about investing came from friends and maybe an investing book at Barnes & Noble or the library, though I did get some insights from some online investing groups I was a part of. Plus, some of my investing friends quit after the crash, so that also acted as a drag on my motivation. But one great aspect of going through a big crash like that was seeing how boring blue chip stocks lost less than other stuff, and even cooler was seeing how my quality dividend income kept trending up. Like Rome was burning around me, but my dividends were putting out the flames, and that experience really helped shape the investor I became. So when the 07-08 financial crisis rocked the markets, I'd learned to just keep investing in quality blue chip stuff, and sure enough my dividend income continued to trend up. I honestly didn't care at all that my portfolio value dropped, because the school of hard knocks had shown me that if you just keep investing in decent stuff, then you'll do fine if you can weather the storm, and best of all was seeing my dividend income that was steadily increasing in all market conditions. Okay, and the final big stock mistake I made was when I invested 50 grand into a startup as an early stage investor. It was a biotech play and I knew the founder, and my wife and I thought it was worth taking the risk. But it never gained traction and sales were sluggish, and ultimately I ended up having to write my money off as a long-term capital loss. That experience influenced me to never want to invest that much in super risky things like a startup again, as I'd much rather simply put my money in solid blue chip dividend stocks and then get paid income to hold them. I mean, I read somewhere that 98% of new businesses go under, and I'd rather have my dollars working on something proven, even if I don't get those big 100x returns. A nice 7 or 8% annualized over the long run is fine with me. Besides, I love how stocks are so liquid. Like, it's awesome that I can literally just press a button and convert my stock assets into cash, unlike physical real estate or unlike investing in a startup. So you don't need to get everything right when you invest, you just don't want to always get it wrong. And my reality is that I've actually made a bunch of other stock mistakes over my life beyond the ones I just shared. Like, I didn't focus on Roths when I first heard about them. I also didn't educate myself enough to basic investing things when I started, like what expense ratios were. Plus, I should have focused more on my wife's retirement account rather than just my own. And the list goes on and on. Leave me a comment telling me what your biggest investing regrets or mistakes have been, so we can all commiserate together. And beyond stocks, I made a bunch of other financial mistakes. Like, I should have purchased my first house sooner, I should have minimized my lifestyle inflation more, I shouldn't have verbally agreed to a big real estate deal with a relative that I thought was trustworthy but turned out not to be, etc., etc. Through all those mistakes, I learned that you can still do quite well if you just consistently are reasonably right. And when you do make mistakes, and you will, or when you get unlucky, which you also probably will, then you gotta have the conviction and fortitude to just keep pushing forward. Most people never start to invest, and many that start will end up quitting. But the winners are those that learn and don't quit, and that keep pushing forward, especially during the tough times, and doing all that will make you feel less stressed about financial things. And we all need less stress in life. Like I saw this survey that found that 74% of working Americans say that they're stressed about their personal finances these days. And the best way I know of to reduce that stress is by owning quality assets that pay you dividends simply for owning them. The more of those good dividend producing stocks you own, the lower your stress becomes and the sooner you can retire. And please don't put off investing. My wife was just telling me about how a friend of hers broke down today crying because they owe about 20 grand on their credit cards, and both of them felt like losers because they had not invested in any stocks nor had anything in their retirement. But I want you to understand that even if you haven't invested, and even if you're struggling just to make ends meet, then rest easy knowing that you have options that could take you in a fun new direction full of purpose in life. Like I just saw this video about this guy who moved to Vietnam because he was really struggling with things.
I want to tell you guys the real reason why I moved to Vietnam 7 years ago. So this is a story that I've kept pretty close to the chest because, to be honest with you, I'm a little bit ashamed of it. And I guess, felt just a little bit of vulnerability with regards to this story. So I want to get it out there. A lot of you ask me, why'd you move to Vietnam 7 years ago? What brought you over there? Why Vietnam specifically? So I want to go over those things. I also want to tell you that a lot of people say, wow, it must have taken like really amazing courage to go all the way out there, to move all the way across the world. And I do want to tell you that it's a little bit of that, but it's mostly something else, and it really wasn't courage to me. So
he felt like he had no purpose and had become an alcoholic and a substance abuser, and he was living in his parents' basement, and bottom line, he was very depressed. Like very depressed. He saw how lots of his old friends and high school classmates were seemingly doing well in life, getting good jobs and just succeeding. This guy had failed out of college and he felt like he was scraping rock bottom. Fortunately, he saw a Facebook post from an acquaintance he knew that had moved to Vietnam and that had started teaching English there, and how doing that had completely changed his life for the better. After seeing that post, he decided to copy what his friend did. So he did some research and then sold his car and moved to Vietnam and also started teaching English, and it completely turned his life around. He went from feeling depressed to looking forward to waking up and living his new life, all on very little money. I tell you all that because I want you to realize that no matter how down you feel, that tomorrow is a new day that can radically change your life trajectory, so never give up and be willing to explore new things, and it's amazing what doors can open up with just a bit of passive income. I mean, the median annual household income in Ho Chi Minh City, Vietnam is under 10 grand a year. The guy who moved there suggested going in with at least 5 grand cash, and he said teaching English can make you $1,000 to $2,000 a month on average, and that your cost of living can realistically be only $1,200 a month or even less. So maybe you make a couple $100 a month from quality dividend stocks, and then you get a job teaching English for the rest of your expenses. The point is you have lots of options, even if you've made mistakes, even if you're an almost broke alcoholic living in your parents' basement. And with that, I'd like to close things off and do a shout out to ApeMan23, who recently grabbed an open Patreon Aristocrat seat. Also, please consider using my FASTgraphs affiliate link along with my coupon code in the description of this video, as using both will allow new users to get 25% off their first payment even if they sign up for a full year. I'll also recommend checking out my Seeking Alpha affiliate link, as new users often get discounts for signing up. Plus, take a look at my Patreon seats to see if there are any you want to sign up for, but since my Patreon Aristocrat and King seats are usually sold out, I'll also recommend that you join my channel membership, which gives you a variety of perks, including a badge icon that is placed by your comments on my videos and which levels up over time as long as you're a member, and you get the ability to vote on which thumbnails I use for my next video, and you get to watch my videos about a day before I release them publicly. But whatever you do, please hit the thumbs up button, subscribe if you haven't yet, and click that bell notification. And don't forget to join my free dividend Discord chat server, which has over 11,000 dividend investors on it from 81 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. Remember, I'm not a financial advisor, and my videos are for entertainment and inspirational purposes only. Investing of any kind involves risk. I'm only sharing my opinions with no guarantee of gains or losses on investments.